Hello, everyone. Steve Ankerstar here, and welcome to the Ankerstar Wealth. I would like to say morning show, except it's like 5:30 in the afternoon. It's first time we can get around to it today. And Allison, unfortunately, is still out this week. She just finished her final. She drives back from Alabama tomorrow. We're super excited to have her home and excited to have her back at the show to be able to help me get these published at a normal time in the morning. But today we're going to talk about three things. First of all, the Fed raised rates yesterday. Hopefully, this is the last of the rate hikes, right? It's been 10 meetings in a row where they raise hikes or they raise rates, excuse me. So if this marks the top, I want to show you a chart of how markets perform once the Fed stops raising rates. And I think you'll find this insightful. I did a lot of buying today. Today was a horrible day in the market. I had a lot of buying, and now is going to be your time to buy because if this is the peak of rates, this is where you want to start putting your money back to work for you. So that's one thing. Is there. Second thing, we'll talk about Eli Lilly. Got a favorable report from their Alzheimer's drug. This was not the first time we've been down this road, so I'm not like as excited about it as some other folks that are, calling me up left and right saying, "Here, we buying Lilly here." It's like, well, no, it's kind of already made its move. But let me show you the chart, and you can make your own decision. If they actually nail it this time, you're right. The stock's going through the roof. If they don't, it'll just be another false start higher. But obviously, tackling one of the world's most difficult problems of Alzheimer's. And last thing we're going to talk about today is Apple's earnings. Just came out after the bell. They did beat earnings. The stock is up a little bit. Where's the stock going from here? I'll give you the story up. I'll give you the into the story up front. It's going higher. You know it is. But before we get started, remind us the financial education presentation. So you have to do your own due diligence before actually find anything you hear in this presentation. Full disclaimer information is available at ankerstarwealth.com. Now let's get started and get out to you this chart here. Okay. So what happens? This is a chart, a historic chart of what happens well after the Fed ends the rate hiking cycle. So as a review, we've had 10 rate hikes in a row. We're up to 5.25 on the short-term rate. I think that's about it. I called at the beginning of the year that the rate hikes will end in the second quarter. So hopefully we'll see that. June is the next meeting, and hopefully they'll just pause. If you look at the specific verbiage that was not in there, they took the line out about, aggressively continuing further tightening, right? So hopefully this is it. We shall see, but take a look at this. So there's a week after. So you got the date of final rate hike, right? So that would have been May 2nd yesterday. No, May 3rd yesterday, right? For if this does mark the top, yesterday will be the next line in this chart, right? You don't care about 1 week or 1 month after, right? But you start getting into that 3 months after, 6 months after, 1 year after. Again, SPX is equivalent to the S&P 500. So 3 months after, the average performance, if you go right to the bottom, is up 8% in the next 3 months. Why would that be? Well, once they stop the rate hikes, people can start pricing in, where the market is. You start knowing what that interest rate is going to be instead of it being a moving target. So it adds some certainty. If you add certainty, you're reducing volatility. Markets can now reprice everything accordingly and start moving higher. Now, go over to that next chart. 6 months, you tack on another few percent, almost 12% higher on average. Last 5 times they had these rate hike cycles. And then you go to the 1 year column and you're looking at almost 22%, just call it 20 plus. Now it's not perfect, right? When you go to the exact 5 years, there's the minus 12% in there. But other than the big minus 12%, it looks pretty amazing. So that's why when you're like, Steve, why are you buying in my account? Well, I'm buying because of this, is because the certainty is coming back, which means the volatility is going to be reduced and the returns can start going back higher. So that's the philosophy. Obviously, it's not foolproof. It didn't happen in 2000, 2001. But for the most part, that's what I expect to happen at this time as well. Some folks also ask about rate cuts. I don't think we're going to see a rate cut this year. We are going to see rate cuts. We're not going to see it this year. They'll probably be able to drag their feet until 2024 and then start cutting like champions because that's kind of what we do. Okay, let's switch over to the next one. Eli Lilly and their their Alzheimer's drug. Here was the article. Again, Lilly moved up 6.6% on Wednesday. Made a big move higher. We'll pull the 1 year chart. This is the third or fourth rodeo with Eli Lilly and their breakthrough Alzheimer's drug. So when you go out to the 1 year chart, so this is kind of telling, right? So here's the beginning of the year, 23. It went down, started back up. It's kind of hitting new 1 year highs, right? But when you go to a 5 year chart, It is moving significantly higher, but you've seen these big moves up. These are all rumor moves, and then they come right back down. Then come back down as far. So if you've held through all this, you're up money. But I wouldn't necessarily go out today and say I have to have some Eli Lilly here. If you don't have any, maybe you pick up some. If you have some, maybe you pick up a little bit more. If you have a lot, I would actually say take some off here. Just because it's such a steep rise. You zoom into just this, 3 months, and it's kind of like straight up, or 6 months straight up there, parabolic, if you will. Things don't last when they're parabolic. However, if it's true and they get, so the next step is FDA approval. If they do get FDA approval for their Alzheimer's drug, you can expect things actually will go significantly higher from that. So we shall see. Jury's out, but again, we have been here before with curing Alzheimer's. It's a terrible problem. I'm not sure it can be cured, mitigated, that sort of thing, but we shall see. Okay, lastly, after the bell today, big down, ugly red day in the market today. However, there are some good news stories out there, and Apple was one of them. They beat earnings. They have better than expected iPhone sales. Again, people like to talk kind of crap about Apple, and negative news stories out this morning about how Apple's going to miss earnings and it's going to bring the whole market down with it. Well, just not true, right? It's the best company in the world. That's my opinion. A lot of others share that opinion with me. But, the good shares to hold, they did talk, you can get into the exact numbers there if you're really into it. I don't generally look at the exact numbers. I look at just kind of the overall, they made $1.52 a share versus $1.43 expected. Revenues up, gross margins up. What's not to like? What I didn't hear today that was rumored was a $90 billion stock buyback, which is huge. Remember, so if you're a shareholder and companies are buying back their stock, your shares are incrementally worth more. So that could really help the stock go higher. And there's rumors of a dividend. Again, didn't see it in the news today. It's only been, an hour and a half since it was announced. So maybe it's coming. Maybe it'll be parsed out tonight. But we shall see. But expect I think Apple will carry the market higher tomorrow. Pretty much, when Apple beats earnings, everybody else has hope, and now we finally have a green day in the market. We'll see. We'll see if Friday, if that actually happens. All right, that's all I have for today's show. Thank you so much for listening in. Continue to send me your questions and concerns and stock picks like Lily. If you want in something, we can always get you in. But that's all we have for today's show, and we will see you back bright and early tomorrow morning. Have a good one.